Hey everyone, McDonald's reported second quarter 2023 earnings results that impressed stock market investors. So in this video, I'm going to review those figures. I'm also going to update my recommendation of McDonald's stock. Coming into these results, I had the stock rated as a buy. You're going to want to tune in to see if I'm changing that recommendation. So let's get right into it. Total revenue of 6.5 billion was a 14% increase year over year. Earnings per share of $3.15 was up 95% from the second quarter of 2022. These are phenomenal growth numbers, and this is not something you can expect from McDonald's longer term. Just in the short term, the company's experiencing a boost from its digital upgrade, and I'll talk more about that a little bit later in the video. Global comparable store sales increased by 11.7%. That means locations that were open for at least 12 months. Sales increased by 11.7% at those locations. That's very impressive. Again, not something you can expect from McDonald's longer term. Digital system-wide sales in their top 6 markets were over $8 billion. That represented 40% of their total sales. Now remember, system-wide sales are usually much higher than revenue for McDonald's because the company runs on a franchisee model, right? So system-wide sales are the total sales for all McDonald's in existence, and then McDonald's, the corporate headquarters, takes a percentage of those franchisee revenues, of those franchisee sales, as revenue for itself. Now, let me talk a little more. Earlier in the pandemic, McDonald's made a great pivot towards the digital channel. The app, the partnerships with Uber Eats and DoorDash really helped fuel sales growth for McDonald's. And that's been another benefit to the company in addition to the cost savings, right? The cost savings have been huge for McDonald's going digital because guess what? When you have an app, the app can take orders, and the app can take orders 24 hours a day without requiring a wage. You don't have to pay the app, right? And so that's been a force bringing down labor requirements for McDonald's at a time when it's the most difficult to attract labor than it's ever been in its history. So that's been a huge benefit for McDonald's is the app and online, it takes orders. You don't have to pay a cashier. Cashier doesn't have to stand there taking orders. The cashier can spend time instead making the food, taking it out, and it's been incredibly popular with customers as well, as evidenced by the growing system-wide sales trending more so for digital. Now, as far as my recommendation for McDonald's stock, I am keeping it rated as a buy. McDonald's stock is trading at a forward price to earnings of 24. It's the most expensive it's been in 18 months. So I'm not the only one that's realized this huge benefit to McDonald's coming from the transition, the expansion to digital channels. And I think this is going to be a tailwind for McDonald's for several quarters and several years more to supplement its already strong drive-through sales network, right? That helps convenience as people can just drive through. Now this adds another layer of convenience to folks who can order McDonald's for delivery when they're not in their cars or when they're not out around a McDonald's restaurant. So a really nice upgrade for McDonald's, and I'm keeping the stock rated as a buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.